we also have big economic news. Let's go ahead and put this up on the screen. So the Federal Reserve did go ahead and move forward with what was expected. Here's the Boston Globe says Fed attacks inflation with another big hike and expects more. So that might be the most critical part. They hiked the rates by 75 basis points. That's 0.75%. So there had been some analysts that were saying, oh, they might even do a full 100 basis points. They didn't do that. They stuck with the 0.75. That being said, that is still quite extraordinary of an action. This all comes as, there was a hope that inflation was really starting to be brought under control. Those hopes were dashed, I would say, somewhat by the last reports we got about exactly what the inflation numbers are. And as I said before, their expectation is they're going to continue in this direction. And, I know we're a broken record on this, but it's a dangerous situation because, number one, you're using a tool that isn't really well suited to deal with the underlying problems here. Number two, there's a lagging effect where when you hike the rates, it takes a while for the impact to hit. They're very clear about, hey, we want to get wages down. We want to get unemployment up. This all could potentially be a disaster for you all because the worst possible scenario is you continue to have a high inflation, but you also have a severe recession.
Yeah, exactly right. And all of the downstream effects are just becoming completely crazy. Let's put this next one up there on the screen. Existing home sales fell dramatically in August, and prices are softening significantly. And then furthermore, put the next one up there. This is a crazy one that you found. The median American household would need to spend 44.5% of their income to afford payments on a median priced house in the United States.
That's insane.
The highest percentage on record going back to 2006.
Wow.
So what is going on here?
Wow.
Here's another way. Somebody just sent me this, and it's actually completely insane whenever you consider it. In terms of mortgages, if you secured a 30-year fixed mortgage on a $600,000 home at a 2.6% interest rate in 2021, you now have the same monthly mortgage as someone that just bought a $392,000 home at today's 6.2% interest rate. That's how much interest rates matter whenever you buy property. Almost, 2/3 of the value of the house. And so that's why what we say is like, look, just because the sticker price goes down, you ain't paying less. Unless you got a ton of cash in the bank.
That's right.
You're not doing so well.
Yeah, it really is a worst of all possible worlds. Right. Because if you're a homeowner, number one, you're stuck in your house because you can't afford to give up the mortgage rate that you've got locked in. You're in the best possible position, but you're also watching your equity go down as prices are coming down in most major markets. Right now, as of now, you've only had 2 markets across the country, Boise and Fairbanks, Alaska, that have actually seen year-over-year declines. But you have a majority of markets that have seen prices come down from their peak, okay? So we are in that prices are softening, they are headed downwards. So homeowners are stuck and they're seeing the equity in their house decline. But they're in the best possible position. Right, people who have a dream of one day in their life being able to afford a home, this is a disaster because, you might see, the sticker price is coming down, but then you do the math on what the mortgage is going to cost, and you're like, there's literally no way. It's never been more unaffordable. So it really is kind of a worst of all possible worlds for regular people. Now, if you're permanent capital and you got tons of cash and you can come in and benefit from, the fact that prices are going to come down, well, that's going to be great for them. And they're all positioned to want to be America's landlord. And it's a disaster in terms of building middle-class wealth and having some reasonable track to get to the American dream. So that's who ultimately this state of affairs benefits. But you can see a huge slowdown in terms of the number of homes that are sold. So sales were 19.9% lower than in August of 2021. So when you look year over year, the number of homes being sold down 20%. So you can see the market has sort of seized up, even as you don't have this dramatic fall in prices, because the other pieces, you still have low inventory. Home builders are still, because rates are going up, home builders are still sort of holding off in terms of what they're putting into the market. So it is a terrible situation and isn't going to benefit any ordinary Americans right now.
Yeah, I think that's exactly right. It's a very, very difficult situation. And everyday life, both on inflation and in terms of mortgages, now much more unaffordable for people on top of squeezing the rental market. So it's very sad. And ironically enough, only contributes even more to rental inflation.
That's exactly right. So that's one of those effects that, as we pointed to, when the Fed hikes rates, it's not all anti-inflationary. There are some effects here, like increasing rent prices, that actually go against what they're trying to accomplish. Cable news is ripping us apart, dividing the country, making it impossible to function as a society, and making it impossible to know just what is true and what is false. But the good news is they are failing and they know it.
That is why we're building something new, a new mainstream, a healthier one, something more trustworthy, something that we are going to need in one of the most pivotal times in American history. We are building up here for the midterms, for the upcoming presidential election, but we need your help. So if you can help us out by becoming a premium member today at breakingpoints.com, we're trying to change America for the better and the entire world.
So what are you waiting for, guys? Go to breakingpoints.com and sign up and help us build a new mainstream.